Well, the last gentleman got us about part of the way there. I'm going to get us the rest of the way there. I'm going to be very brief so that everybody can eat. But thank you very much for having me. Obviously, I always say yes anytime Charlie asks me to do something. But really want to talk about what's happening in the economy right now and where I see crypto prices going in general. I'll probably refer to prices in terms of Bitcoin because it's easier to predict, and most other prices follow. So what's happened so far this year is interest rates continue to be extremely high with the Fed target rate of 5.5%. We are in an election cycle. We're also in a Bitcoin halving cycle. So those two things put together have really been quite interesting, as well as having Bitcoin ETFs launch earlier this year, as well as ETH ETFs launching this week. That's actually disrupted the cycle a little bit. Essentially, it sped things up. So the inflows into Bitcoin ETFs earlier in this year in January have sped up where we generally go, and created a lot more demand for Bitcoin and other assets going into the halving. We generally see in this part of the cycle prices go up into the halving, expecting something to happen, and then of course dropping off after the halving into the summer. The halving also coincides with the election cycle, so there's usually a bit of uncertainty in markets going into an election cycle until there is a new president that's elected. So our expectations were, of course, that prices would rally given the both Bitcoin spot ETF launching and the halving, and then dropping off into the summer on very low volume. With interest rates as high as they are, there is an expectation that interest rates will be dropped in September ahead of the election. I actually believe, I'm on the side that believes that there's a higher chance or higher probability of a rate decrease as early as next week. So I know that the market hasn't priced that in yet. The market's only priced in a 7% chance of that happening. My odds of that happening is closer to 30 to 40%. And primarily because of the change in the Democrats' president or the Democrats' candidate that's running for president. If they feel like she has a chance, they will likely try to start pressuring the Fed to lower rates 2 times ahead of the election to boost risk prices. So there is a chance for that, but almost certainty that we will have rate decrease in September and likely a follow-on in November. If you look at the current yield curve, 2-year treasuries, for instance, are at 4 3/4, which essentially predicts Fed decreases of a total of 75 basis points by next year. So whether it's in July, September, November, or September, November, December, it really doesn't matter. A decrease in the Fed rate will help risk prices, which would be the stock market, as well as crypto prices as we go into the end of the year. And again, that does follow the typical economic cycle of Bitcoin. A few things have happened, again, that has caused prices to change ahead of time. One is of course, the Bitcoin spot ETF, which I was one of the ones that launched one of those. Did not participate in ETH, by the way, because the ETH ETFs this week, I didn't feel like there was going to be as much demand. And sure enough, yesterday it only had 15% of the inflows that Bitcoin spot had on day one, or net inflows. So there was a lot less demand for the ETH ETF, but also given that ETH had moved to proof of stake, and you're essentially giving up anywhere between 2 and 3% yield for staking ETH, I didn't feel like it was a very good product, and the SEC didn't allow that into the ETF wrapper. So I really didn't believe that a lot of people would be moving their ETH either off chain or out of staking to move it into an ETF and give up that yield. It's an essential part, in my opinion, of that particular protocol. But the ETFs have sped up the typical cycle this year, and then secondly, usually you wouldn't have risk assets rally like they did this early in the summer. But of course, the attempted assassination, the assassination attempt on former President Trump did essentially solidify the fact that a lot of the market believes that he will be elected president. So that did cause a rally in asset prices as well as in Bitcoin and other cryptocurrencies. What do I see going forward after the Fed cuts and after the presidential election? We should see Bitcoin probably around 150,000 this year, which means that most other cryptocurrencies should rally about or should about double 2x by the end of the year. And then of course next year I do expect Bitcoin to be as high as 450,000. That's all I've got. Enjoy lunch. Thank you very much.